I've never met anyone who actually knows how their 401k functions, how their plan is structured.
Yeah.
Can they take money out? When can they take money out? None of that. And that's what we're here to do.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, I've got Dana Udumulla. How close was I? Was I close?
You were very close. Very good, Todd.
So Donna is with Madison Trust, and she's the investment manager. So welcome to the show. How are you doing?
Thank you for having me today, Todd. I'm doing wonderful. How are you doing today?
Excellent. Why don't you give our listeners a bit, maybe about your background and then about Madison Trust Company?
Absolutely. So, my name is Dana Udumulla. I'm the investments manager at Madison Trust Company. We are a self-directed IRA custodian. So, very similar to what Charles Schwab, Merrill Lynch, Morgan Stanley does, right? Where people are able to have individual retirement accounts and get into the stock market, stocks and bonds. We do the same thing. We allow investors to set up IRAs with us, except one key difference. Investors are able to diversify their retirement portfolio into anything other than stocks and bonds. So that's what we call alternative investments. And my clients get into real estate, cryptocurrency, precious metals, Arabian racehorses, private equity, you name it. They get to diversify their retirement portfolio into a lot of different things. A little background on me. My background is really in financial analysis. I did a little time in, the usual Wall Street boutique firms, and then I started at Madison Trust and realized, wait a minute, I think I found what I'm really in love with. That's alternative investments. And here I am.
I love it. Love it. Well, we're in love with alternative investments too on this podcast. So, um, so with a company like Madison Trust, a self-directed IRA, I want to get into right away. What are the I can and can't do with my IRA if I want to self-direct my IRA? What are some things I really I'm not able to do or I have to be aware of as I'm getting to do this?
So it's easy to start with what you can't invest in because according to the IRS, there's only three things you can't invest using your IRA money. That's S corporations, collectibles, and life insurance. So
Hmm.
anything other than that, we can make it into alternative investment to diversify your retirement portfolio. Other than that, some finer things that I always emphasize clients should know and get educated on is prohibited transactions. For instance, the account holder of the IRA is considered disqualified to the IRA itself. So the account holder should not get involved in the IRA investments. And what it really means is, let's take an example, Todd. Let's say you have an IRA with Madison Trust. You purchase a piece of property, a house, with your Madison IRA, right? So now that house is in your IRA, it's a part of your retirement portfolio. You, as the account holder, cannot live in that house or utilize that house for your personal benefit.
Hmm.
And that I think is the number one thing people misunderstand or aren't aware of. And that gets them into trouble and gets their IRA penalized. Like you personally should have like an arm's distance from your IRA investments.
So what if I want to buy a duplex and then I'm not living in it, but I'm property managing it and I want to buy it, through my IRA and then we'll rent the units and cash flow.
So buying a duplex multifamily through your IRA and renting it out for investment purposes is absolutely fine, as long as you are not, or any disqualified person like your spouse, your kids are not the people renting from you. It should be third-party non-disqualified people. Now, this is a very interesting thing you brought up, you property managing. So technically, we always let clients know it's recommended you speak with your financial professionals, of course, and you have a third-party property manager. But if you really want more control, we have another product. It's called an IRA LLC. It's basically within your IRA, we set up an LLC with IRA provisions. The LLC will have a bank account associated. All the IRA funds will transfer from your IRA to the LLC bank account. And you, the account holder, will become the non-compensated manager. So now we've created this environment where you can be the property manager. Not only that, because you have access to that bank account as the non-compensated manager of the LLC, you can invest into multiple duplexes. You can invest into promissory notes. You can do multiple investments all at once as the manager of the LLC.
What if we're taking an even more active role and flipping a house? Is that something that?
Um, yes, that's completely fine. Again, as long as it stays within the IRA, right? So you flip the house, the proceeds go back into the IRA or the
Mhm.
IRA LLC bank account, and you continue to do it. That is fine. Now, with house flipping and fix and flips, depending on how often you do it, you might incur UBIT, unrelated business income tax. So you might want to also consider that. For instance, doing it here and there, it's fine. But if that is the active purpose of your either your LLC or IRA, where you're doing about 15 to 20 a year, there's a high likelihood that you might incur UBIT. And that's where you, again, need to speak with your financial professionals.
Yeah, I don't want to get too much into the weeds on that, so I don't want to dive in too deep. But give me like why would you get taxed on your IRA? It's we set everything up well and we're keeping the money in the IRA, but what's the scenario where you actually get taxed?
I love that question because it's the whole purpose of having an IRA is to be tax exempt, right? And
Right.
then here we are. There is a way the IRS can tax you. So really the purpose of an IRA, the reason why an IRA is tax exempt is because you want to be able to grow your investments without that tax. Depending on the type of IRA, it could be tax deferred or tax free. But the purpose of the IRA is not for active investing. You set up an IRA for passive investing. So when you cross from passive investing to active investing, which is having an active business, for instance, imagine a coffee shop, right? If your IRA owns a coffee shop that has active business, buying and selling and expenses day to day, that's not a passive business anymore or passive investment. At that point, you do incur something called unrelated business income tax because you just got into a business unrelated to the purpose of your IRA. Do I see it often? I do not. Typically, with self-directed IRAs, a lot of the things that clients get into are very passive, which includes rental properties, right? So the early example you said of buying a duplex and renting it out through your IRA, that's passive. You're not going to see you bid there unless the whole business of your IRA is every week I'm going to fix and flip properties. That's like 52 properties a year.
Yeah. Yeah. Interesting. Um, that I mean that's good to know. Obviously, talk with your CPA as well, right, on that. But I think as Madison Trust, you might be able to give some small guidance too, with of course that caveat of talk to your tax professional. One of the reasons why, so in our syndications, we've got a lot of investors that like to use IRAs and 401ks and um one of the reasons why I wanted to bring you on to talk through is that I think first of all, a lot of people just aren't educated, like, oh, I can actually use my IRA. But the
Absolutely.
other
Yep.
thing is we're it's not we don't only exclusively send our investors to or force our investors to use Madison Trust, but your company is one of the companies that's the easiest to deal with. Um, and so this is I'm a little tooting your horn here, but you guys are
I
the
love
easiest to
it.
deal with. And the frustration that we have is when you get an investor that's set up with a custodian and the custodian does nothing. They don't help at all. They don't give any advice. They say, we just can't do that. We can't do anything. And I know Madison Trust and every custodian has rules that they have to work around with the government regulations, but you guys at least help guide that process. So that's been really instrumental for our investors. Just having people that can help navigate the situation that they're in. Um, so I don't know where I was going with that as far as the question goes, but I guess just happy to refer always Madison Trust because it is such a difficult thing I think for a lot of people to navigate. And we've had
Mhm.
situations where um people go through Morgan Stanley or some of the bigger traditional firms, and they think they're going to do a self-directed IRA, and these companies say they can do it, and then they get to the funding, and they're like, "No, we can't do this."
And I like that you brought that up because the word self-directed is thrown around so much. The amount of times a week I have to explain to people, yes, you have a self-directed with Fidelity. It is not the same self-directed that we offer because with Fidelity, you have three buckets. They're all traditional stocks and bonds. We're not traditional stock and bonds. We get into syndications such as yours, alternatives, pure alternatives that other firms, IRA companies like Morgan Stanley are not able to get into or don't provide access to.
Yeah.
And that being said, I love that you are, just praising Madison Trust. Is always music to my ears to hear that we have set up such a streamless process. But the reason why Madison Trust even came to be is because the founders of Madison Trust faced the same challengers that you're talking about right now. They used to have self-directed IRA with their own self-directed IRA at another firm where they realized there's no customer service. And we all understand we can't give advice because we are not a fiduciary, we're passive custodians. However, we can guide the client on what they can and cannot do. For instance, a simple example of you can't live in the house that you buy from your IRA. That's not advice. That is stating a fact, a regulation that exists. And that is something we can absolutely let the client know so that they don't put their hard-earned retirement money at jeopardy. Also, when investors want to get into a fund, maybe from a 401k into an IRA, the process can seem daunting and complicated because you might be a doctor and you are the best doctor in your field, but when it comes to retirement money, everyone's like, well, I have no idea what to do.
Because you've been so used to just like the money just goes places, right?
Exactly.
You don't touch it.
And you don't even know how it functions, right? Like,
yeah.
I've never met anyone who actually knows how their 401k functions, how their plan is structured.
Yeah.
Can they take money out? When can they take money out? None of that. And that's what we're here to do. We have fantastically trained staff, CISP experts. They are certified in IRA services regulations, of course, so that we can actually talk to our clients, see what they want to do and help them accordingly. But on top of that, we love working with investment sponsors such as yourself, where you work with us, help us streamline the process so that your investors don't feel like it's too daunting or complicated. And it's really that team effort on all parts.
Yeah. I mean, a perfect example. We had an investor who went through our investment portal. They made a $50,000 investment, and they went through our investor portal with their personal name. They signed all the subscription agreement with their personal name, and then they funded with their IRA. And they gave us no notice that they funded with their IRA. Just, like, everything was personal. Now, maybe Madison Trust wouldn't have caught this, but I feel like if the right person was involved, it would have. And so anyways, we go through all the way through to where we issue a K1 to this investor in their personal name before it was finally caught that they didn't invest personally. They invested in their IRA, self-directed IRA. And so that's the type of thing that that's a nightmare situation.
It really is, but the good thing is we've seen it all. There's always remedies for it. It also wasn't done with intent. It was these are the sort of things that happens all the time, by the way. You'd be surprised how many times we get subscription documentation with the person's personal name, and that's when we have a fantastic investments team at Madison Trust. They review the entire document to ensure the client isn't using their personal name. They're not using their personal social security because you're not supposed to. You're supposed to use the EIN of the custodian to grab that tax advantage. But a little bit of education, maybe a quick 10-minute call while setting up the account is a lifesaver.
Yeah. Where people that are successful using their IRA, like what kind of advice do you give people to are interested, they haven't done it. Like what steps? What's their steps?
So what I always tell people who want to try to get into this, but they're not sure, like this is their first time, is first identify the opportunity you want to get into, right? There is no point in setting up a self-directed IRA and then coming
Yeah.
to me and asking, well, Donna, what do you recommend? While I would love to give so many recommendations on alternative investments, I am a passive custodian, so I cannot do that. My attorneys will have a field day with me. So the first things first, figure out what syndication are you trying to get into? What fund, what debt fund, what do you want to do? What sort of
Yeah.
passive investing or alternatives do you want to get into? Once you figure that out, do some research. You can't go with the first custodian you see. Do some research. There's a lot of custodians, and I say this very confidently because I know for a fact Madison Trust is one of the leading self-directed IRA custodians. You want to work with somebody who there is a customer service team, like you need a real person on the phone
Yeah.
because
That's huge.
it's a huge thing. Like when you're talking transfers between, an IRA to an IRA or rollover from a 401k to an IRA, it can get complicated, right? And you want a person to work with.
Yeah.
That's important. And the fee structure. What are you willing to pay? For
Mm.
some custodians are based on portfolio value, some are flat rated. We are flat rated, so you could have a $50,000 investment or a $100,000 investment. Our fees remain the same. So
Mm.
once all of that is identified, set up some calls, consultation calls, have those conversations. Don't just set up your account, do that due diligence, really see who do you work better with, and then go from there. And most of the time, whether they go with Madison Trust or not, I give the same advice to everybody because at the end of the day, this is your retirement money. And it's so important that you work with a custodian that you're comfortable with and you trust and that you can get in touch with.
Um, how, what type of, because there's a lot of different retirement accounts. What type of retirement accounts can you or can't you move to self-directed? Why wouldn't you be able to move one and you could move a different one?
So anything that falls under the retirement umbrella can be moved to a self-directed IRA. Just the method of moving the funds will change. For instance, if you're moving funds from an IRA at Charles Schwab, it's going to be considered a transfer to an IRA at Madison. If it's a qualified retirement plan like a 401k, a 403b, it's going to be considered a rollover because it's still retirement money. The structure is different. The only time, and we were speaking about this right before we got on, the only time I see where people are not able to move their money is if the plan is structured in a certain way. Just recently, I had a client and he really wanted to set up his self-directed IRA to get into a syndication. However, when we spoke with his 401k administrator and reviewed the plan docs, the plan was very rigid. So unless the client is 59 and a half or is terminated or just leaves his current employer, you're not able to take funds out or roll over funds to another plan. So with 401k, so any employer sponsored plan, that's one of the hurdles, right? If you're
Yeah.
still actively employed with them, you want to contact the plan admin and say, hey, do I have the opportunity, the possibility to roll my funds over? Sometimes they might say no, because you're still employed. Sometimes they might say, actually, you can roll over a partial amount. So you need to have that conversation. Again, it's all with education. Call your 401k, figure out how the plan is structured.
Yeah, it seems like a lot of times that's the one that's the sticking point right there. If you're still employed by that employer, it might be challenging to move that over. I haven't read a scenario where I've had an investor that's been able to. I'm sure you've seen it where it's able to be done, but
Yes.
we always get stuck at that point.
I at that point I always recommend because there's the other thing too, right? It's because it's complicated and the pushback, all the service rep you're speaking to immediately might not be aware. Ask them if you are able to review the plan documentation and where exactly in the plan documentation it says it could be called in-service withdrawals or distributions, that area. Review that area and see, okay, what can I take out? What can't I take out? What's the criteria for the rollover?
Can you do this on your own without a custodian?
Which part? The self-directed IRA?
Yeah, yeah. Could I take my IRA funds and move them into, let's call it a syndication with Honduras? Could somebody do that without a custodian?
Unfortunately, you cannot, Todd. The whole purpose of having the custodian is to have that tax advantage, right? So if you move funds from one of your retirement accounts to yourself, you just took ownership of your retirement funds personally, there's going to be a tax liability. Where Madison Trust comes in is we give you that tax advantage. We hold it under our custodianship so that you can invest into your syndication with that tax advantage. The minute you take it out of that, out of a Madison Trust account to yourself personally, or out of your 401k to yourself personally, it will be considered a distribution and there will be tax liability.
Awesome. Well, maybe not awesome, but good to know.
Yeah.
Can you invest in foreign, real estate or businesses outside of the U.S.?
So the quick answer is yes, you can. But there's a little bit of steps involved in it. For instance, with Madison Trust, we do not hold foreign investments directly through the custodial accounts because there's different foreign laws and regulations, and we are governed by US regulations. There's a lot of that, right? However, you again, going back to that IRA LLC option, if they really want to get into foreign, you can set up an IRA LLC, and then the LLC can get into foreign investments or foreign real estate. But again, speak with your financial professionals, an attorney, preferably in that case, because there's a lot that goes into play when you go outside of the US.
What's a what's like the maybe not biggest mistake, but what's a mistake that you've seen um somebody make, whether it's a current client or a past client or a client that came from somewhere else? I was like, you're just like, oh my gosh, what's a mistake that you've seen made, and how can people avoid it?
I think the biggest mistake I've seen is, and I'll take real estate as an example because it's the easiest one, tangible property, is people using it
Mm,
personally
yeah.
or renting it out to disqualified individuals, like renting it out to their kids. And again, without knowing, no malicious intent, they just weren't aware, weren't educated. And when that happens, and we are aware of it, as a custodian, it is our duty to distribute them. And at that point, they're going to have some issues with the IRS because they did something they're not supposed to do. And I see that a lot, like people going to purchase contracts. They're going to use their self-directed IRA, but they put the earnest money deposit personally. At no point are you supposed to get involved personally or put your personal funding in to investments. So I keep saying it like a broken record because every single day that is the biggest mistake I see. People either put their personal money into an investment or they get personally involved in the investment. Like they have a vacation property where they rent out and they use 2 weeks of the year of the property that's under their Madison Trust account. That's I always tell them, just if you're not sure you're about to do something, just give us a call.
Yeah, even
Well,
if you go and visit and stay a couple nights, you're probably shouldn't
you
consider
shouldn't.
it.
The easiest way to remember this is don't even change a light bulb in your house that's owned by your IRA. Like,
Mm,
don't even.
yeah.
Like, stay arm's length. Unless you're the manager of an IRA LLC, now you have more control.
So as long as you set it up right, you could change the light bulb. You could rent to tenants not related to you, uh, not you, but you could do some of that. But you just make sure you're setting it up right, so it's still arm's length.
Correct. The whole purpose of being that non-compensated manager is your primary duty as the manager is to make decisions to benefit your IRA, not yourself personally.
Yeah.
So that
The better
structure
thing to do
helps.
is just to invest with Endurus, and then you don't have to worry about
There you go. That's
it.
it.
uh, um, awesome. So I think it's crazy. There's so much money stuck in IRAs, and I think a lot of people just, again, like we said, there's no control. You don't know what your money's doing. There's a lot of other opportunities out there to be able to place your money into something that is an alternative to stocks, bonds, and mutual funds. And
Mm.
it's funny because all these financial planners, they always say, well, diversify, 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 but then they don't diversify. They're stuck in there.
The amount of
So
times I've had to have calls with financial advisors who do not understand self-directed IRAs is astounding. Again, I'm seeing a pivot recently where more financial professionals are getting into this field, but their first reaction is, yeah, that doesn't work like that. I'm like, no, it does. We've been in existence since 1975, that this is a
Yeah.
legitimate thing, and this is true diversification.
Yeah. Yeah. This is true diversification. There's 40, almost $40 trillion, I think, the last I heard, in retirement accounts. And do you know how much there is in self-directed retirement accounts? I don't know, but it,
Off the top of my head, in total, I'm not sure, but I can tell you that Madison Trust has about $4.8 billion worth of alternative assets under our custody right now.
so even it can't even be, I mean, it's just a small percentage, right? It's just
Such
a
a
really
small,
small percentage.
small percentage, because again, a lot of people, we have a lot of players out there, self-directed, and we've been here since 1975, just the self-directed IRA industry. No one has utilized us to the full capacity of it. Like,
Oh,
other than investing, you can also raise capital through self-directed IRAs, and that's what Honduras is doing, right?
yeah.
Investors are able to utilize their retirement funds to get into deals like this, and you, as an investment sponsor, you're able to raise money through retirement funds.
Yeah.
So it's really, now we're getting some sort of exposure, but Huta, there's a lot more work for us to do to get out there and start using that $40 trillion properly.
Yeah, I mean that's where the largest amount of wealth in the U.S. is held, is sitting in these, you know, retirement accounts, and I would guess less than a trillion is in self-directed IRAs,
Yeah,
which is just crazy. So
it is way less than a trillion,
yeah,
way less than a trillion. It's just, it's unfortunate, but hey, that's why we're having conversations like this. And that's why I appreciate the opportunity to be part of your podcast, to just bring more awareness to amazing products like this that underutilize financial tools.
what else should people know about self-directed IRAs, or like what are the first things they should be doing um, if they're interested?
I think the first thing, they like I said, if you have the investment ready to go, you have a number of self-directed IRA custodians, give someone a call. That's it. Get to know them a little bit. And then once you feel comfortable, set it up and go. And passive investing for your first investment through a self-directed IRA is what I see happening most of this time. So you get into a syndication deal, see how it goes. Figure out all the little details of a self-directed IRA, and trust me, more than 80% of my clients, once they do that, they always keep coming back for more investments, reusing the profits, the returns they get from the first investment into multiple other things.
Yeah.
So dip your toe in, try it out and see, because the truth is self-directed might not be for everyone. For someone who really does not want to do anything at all, self-directed might not be the way, but someone who really wants to get into real estate, but you know what? They don't want to own the property. They want to get into a deal like yours. Self-directed is perfect.
Yeah, and I think as I'll speak to us and our investors and the relationship with Madison Trust, I feel like if somebody is coming to us with the self-directed IRA and they're communicating with us early on right away, it's fairly streamlined. At the first time, it's a little more difficult, but we've done it enough to where, again, you can kind of go check this out. Like, no, wait, we got to look at this a little bit. And so the first time is a little bit more work, but it's still just not that much work. And then from there on, it's really easy to set up. But one of the biggest things I tell people is, look, have the conversations first with self-directed custodians. Like, get to know them,
Mhm.
make that choice first. Like, know everything is set up, because when you commit to one of our investments, you got to act pretty quickly. And if you're
Mhm.
just not on top of it, if you don't know if your funds can be transferred, if it's locked up into a company you're still employed with, and or something like that, like it just might not happen right that
Mhm.
that quick. So know what you're doing, have it set up, have the conversations already. I think that's so valuable. And quite frankly, even if you decide not to go that route, it's a good education.
Absolutely. And something will always come up, right? Where you're like, wait a minute, this is the opportunity to get in with a self-directed IRA. And that happens often too. Maybe the first time around it doesn't work out, but second time, third time, something always comes up. And we set up the system in a really seamless way. It's open, fund, invest, 1, 2, 3. So the clients can open their account, fund their account, and invest through their account in 2 weeks or under. If course, everything goes well.
Yep.
If the 401k is giving us a little trouble and send the check via snail mail, then we have a different challenge with USPS. So there's a
Yeah.
whole other variable there.
there's always, you know, things that don't quite go right. Some, you know, in cases, but yeah, 2 weeks is a pretty good time frame. I would say that's about right. That's what we tell people. You know, if you're on it and you're paying attention to what you're doing, you can get
hmm
this done in, you know, 10 days to, you know, maybe 3 weeks at the most. So
And of course, we're flexible. So if there's a tight deadline coming, we just need the client to let us know, and we're going to try to do everything we can to get it going.
yeah,
And it's again all about communication. We need to hear from the client as much as we need to speak with the and work with the client.
awesome. Donna, what else? What have we missed anything that you want to hit on?
I think we did a great job, Todd.
Awesome.
Yeah,
Covered everything.
we did.
Well, yeah, and there's a lot to know, but look, it's a quite frankly, it's a pretty simple process. And if you are interested looking at self-directed IRAs, or if you're listening to this and you are a sponsor yourself, um, look, I think you got to tap into this industry. There's a lot of money sitting in IRA accounts that's just being totally underutilized right now, and alternative assets would be a great place for some of that money to be pushed into. So talk to Madison Trust. Donna, really appreciate you joining us. And how can our listeners get in touch with Madison Trust, get in touch with you?
Fantastic. So you can definitely visit our site, www.madisontrust.com. And of course, if you want to contact me directly, our email address is sponsors@madisontrust.com. And if not, Todd, you have my contact information and my team's contact information to share with your investors.
Awesome. Donna, really appreciate you joining the show, and you have a fantastic rest of the day.
Thank you for having me, and you as well.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.